Good morning, everybody. Thanks for joining us. Welcome. Like and subscribe on X and YouTube. You'll be notified when we go live. We'll get started here in just a few minutes. All right. Good morning, everybody. We'll go ahead and get started. This is Michael coming to you from Gamma Edge on Wednesday, November 26th, day before Thanksgiving. So hope everybody has a great Thanksgiving. As always here on our pre-market prep, we'll cover our three pillars: sentiment, structure, and trend. And we'll look at our new web app that will be rolling out to our members hopefully in the next few weeks as we continue to update and do some improvements on it. So let's go ahead and jump right into it. We'll look at the market trend model. If you've followed us for any amount of time or you're just joining us this morning, this is based on the tick indexes, buying versus selling in the overall market for market participants. Quick orientation, the bolded white line or CT cumulative tick is what we refer to our intraday or instantaneous cumulative tick. And we place some momentum moving averages on the overall chart of the time series. This just get an indication of the overall trend of the market. If the bolded white CT is above those momentum moving averages, you want to be long. Obviously, the overall market on a shorter term time frame is moving from lower left to upper right, indicating there's more buying versus selling by market participants. The colored ribbon is our longer look back period. This is our gate to our mechanical portfolios. Once the bolded white CT moves above those colored ribbons, this puts those in a trigger opportunity or trigger position where we start entering in our mechanical portfolios. Those would be our P-Trans to Peak X or our wheel strategy portfolios, and those are turned on today. So we'll be entering positions in those. You can research those at gameedge.us, or if you look on X or YouTube, we have extensive videos about our mechanical portfolios and how they perform using this market trend model. So the quick takeaway is we continue to have an upward trend in the overall market of buying versus selling multiple days here. I reviewed yesterday in our pre-market prep the history of the overall turn and how we use the market trend model to catch moving from an overall bearish state to a bullish state. And I posted our blog article, so make sure you check that out also. Moving up here to our breadth indicator, new highs versus new lows. Obviously, you want to see the green above the red, indicating more stocks are being bought than sold, and we do have that. We'd like to see this expand to the upside, like you were seeing the expansion of the overall new lows. We'd like to separate those new highs from new lows pretty significantly, and hopefully those are outpacing by a large margin. And then the filter cumulative tick indicator, plus 1,000, minus 1,000 larger block orders. We would definitely like to see that continuing to the upside, indicating institutions are entering and using or putting their money to work and at risk, which they were yesterday pretty significantly. So again, we'd like to see this continue to the upside. Historically, this is an area where you could see a failure as we just cross above the ribbon, and this can have another day up or a consolidation day and then roll back over, since we're transitioning from a significant bearish state and the red is still below the cyan. So again, we'll watch this day over day, but as of now, significantly improvement in the market trend model, and we're entering positions in our mechanical portfolios. All right, moving on the SPX. This is our options complex. It's the largest, most notional value. Quick takeaway today. Again, also we separate the SPXA from the SPXP, and we'll show you why we do that. The SPXA is the institutional larger positioning. You'll notice those are contracts don't turn over as rapidly. These are monthly expiries. So this money is not moving and sloshing around in the overall market. These are basically our tankers that are controlling the direction of the overall market through the positioning of the SPX option structure. Again, we're call dominated above and below spot price. So spot price is the yellow bar here. Below spot price, you see the green net delta. So those others are in the money calls below spot price. So those will continue to be supportive. And you see out the money call speculation continuing to return. You will notice we do have significant red net delta up here. These are in the money puts as long as they're above spot price. So those will continue to be a headwind. but we'll look at the SPXP here in just a minute. So takeaway, call dominated, above and below spot price, supportive from an institutional standpoint into the November expiry. All right, moving on the SPXP. Quick takeaway here, call dominated, above and below spot price. All expiries are turned on here. You'll notice the largest GEX expiries coming up on the horizon. And then you'll notice the net delta column is continuing to change to green or all green. Again, significant change in the structure and sentiment as we move from that bearish structure of red net deltas overhead of in the money puts to now green call speculation above us. And we'll look at a few other tools that we continue to use to show this overall shift. But call dominated now, speculation to the upside. In the money calls below us should be supportive. So structure continues to get more bullish day over day. All right, moving on to delta balance for the SPXP. We separate this from the left-hand plane and right-hand plane. So the left-hand plane is the red dotted line that is below spot price. So again, that should be above zero as we've just reviewed those via the web app. Again, it is above zero. So this is indicating in the money calls are in an overall bullish call dominated state. The green dotted line is the right-hand plane that's above spot price. You'd want to see that continuing in a positive slope above zero. That would be indicating out of the money calls are continuing to dominate the complex, and in the money puts are continuing to erode or be mechanically closed. As of now, we're above zero, but on out in time with the expiries, we do see that continue to improve. We do see the left-hand plane drop a little bit, but the right-hand plane is that speculative out of the money calls. That's what we want to see for price appreciation. And we see the delta balance pegged at 1. That's the aggregate of both of those. So again, significant improvement from where we were of the delta balance at -1, completely put dominated. You see the left-hand plane start to, the left-hand plane start to improve. Again, in that shift that we were talking about all the way back here on the 17th, it starts to slowly creep above zero, and then we get some positive slope here. The right-hand plane, though, was stuck completely below zero, so that's your out of the money call speculation. So really, upward price appreciation is going to be difficult until we start to see this improvement in the right-hand plane, which is the green dotted line, and you start to see that, and then you start to see the spot price, obviously with the confluence moving to the upside. So as of now, we've transitioned to an overall bullish state. We'd like to see the right-hand plane continue to improve. It's projected to improve into next week, but we'll continue to watch that to see if this comes to fruition via the via the positioning on out in time into next week. All right, let's move on to the GEX ratio. Let's move on the SPXP GEX ratio. Again, this is a put call ratio, but we add a gamma component, which is a time component, and this is short dated call gamma versus short dated put gamma. Again, we like to see the GEX ratio continuing to rise, indicating out of the money call speculation is coming into the overall complex. And then out of the money put speculation continues to decrease as the spot price continues to rise. Now, if we see spot price rise or price appreciation, but the GEX ratio is not rising, again, that would be a negative divergence within the overall rise of spot price compared to the overall positioning in the structure. So that would be a cautionary overall look. But as we continue to move to the upside, we see the overall GEX ratio continuing to rise, indicating how the money call speculation is coming into the overall structure and complex. All right, let's move on the SPXP net stat command. Again, this is highest sensitivity levels for today. You'll notice we've transitioned into an in the money calls state, out of the money calls here, compared to in the money calls below us, out of the money puts, or we were out of the money puts and in the money puts. So again, this is transitioning to a more bullish state. In the money calls below us will be supportive. Out of the money calls are speculation to the upside. Again, spot price does not go where options are not speculating. So again, we have speculation to the upside towards 6,800. Net charm, again, significant overhead with these out of the money calls at 68.35. So those could be a headwind for today if we're under 68.35 as those continue to decay as time ticks on. 67.50 out of the money puts, those will continue to be supportive as those are below us. And then net gamma, these are obviously the fuel to the fire. If we get above 6,800 out of the money calls, not really anticipating that this morning, but if we do, then this could be some overall adding positive deltas to the complex at a pretty good clip compared to the left-hand plane. So again, this could continue to drive spot price to the upside. And then you see Vanna here. We've talked about Vanna extensively the past few days. 68.35 will be that level to get over, and we'll be adding out of the money calls again at a fast rate as positive deltas enter. So our book gets longer, the dealer book gets shorter. They have to buy to hedge, and that gives us those linear up moves within the overall spot price. All right, moving on to the SPXP. Again, this is our new web app that we've debuted this morning. Still fixing a few things on it and getting it up to speed for our members. So hopefully this will be rolling out soon. Just quick orientation. These columns up here are able to be moved depending on what your view and what you want to view. These are all able to be removed or added to the overall web app. And then the next change that I think will be significant for our members or anyone using the web app is the numerical values will be able to display it, as well as the bar values also. And these can be overlaid, or you can just have numeric and bar, and these will be easily toggled on and off. And they'll be adding a few other features, but these columns being able to be adjusted and moved really aid our members in displaying just whatever they want to display. If it's just charm, or if they want to display gamma, net OI, call OI, put OI, whatever they want to display. So this will be customizable for them. And they'll be adding significant stuff over here as we widgetize this whole web app, and then hopefully be adding further features coming up in the future for a fully customizable dashboard for all of our members and users. So a quick takeaway is 0DT for today, call dominated above and below spot price. You will note that, give me 1 second here. Let me pull up. Sorry about that. Copy. Here we go. I forgot to pull out our 0DT. I think I might have pasted it, but I did not. Let me show you the 0DT with the DS zone today. Sorry about that. There we go. All right, 0DT for today. Call dominated above and below spot price. We continue to see the structure improve day over day, which is great. And now we have in the money calls below us, out of the money calls above us speculation. We do have a slight amount of in the money puts overhead. Again, that could be that headwind area that we'd look for. And we've added the charm now with the bars. This is easily visible where we could see that headwind come in. We talked about that on the net stack command. That'll be 6,800. And that coincidentally is the peak X level. We see peak X level. We see COI up here at 6,900. It's most likely not traversing up towards that level. You'll notice the GEX and DEX transition are confluence today, which is good. That gives us simple if-then statements. You'll notice COTMP here, again, proprietary level for Gamma Edge, where out of the money puts go in the money, and historically we see a monetization. So when we see a confluence of COTMP, GEX and DEX transition, we have a high confidence that area should be supportive on any pullback. That would be 67.55. You'll be within the overall drunken sailor range, so it could be choppy, but again, supportive type action there. And then on down, if we do lose the transition area, we see 67.25 down here at the bottom of DS, as well as significant charm below us. That should be supportive also as we would pull back down into that area. Again, not anticipating that. I would anticipate us to hold the GEX and DEX transition areas, or possibly drop into it and then move back up off of it. That would be an overall trade that we would look to take. If we pull back to the top of transition area, again, this could be a long area where we get long for a move back towards the top of DS and then outside the DSL level. But you'll notice that 6,800 overhead is going to be that area that most likely will be the first headwind in trouble, depending on where we open this morning, as significant net charm values there, as well as our PGX level there. And then our COTMC above us, again, that's where out of the money calls become in the money. And as always, moneyness matters. And historically, that's an area where we see some profit taking also. So 6,800, 6,810 would kind of be that overhead area that be watching for some stalling and failure area, or some stalling and failure initially in spot price. And then we could look for a pullback down towards the overall top of drunken sailor range or the GEX and DEX transition. You know, this purple area here, this is now outlined for us via the web app. This is the expected move, 0.73% or 50 points. So it gives you an idea of where the overall market structure is expected to move. And as I said, we're looking at that 6,800 to 6,810 level, and then 6,820 would be the top of the expected move for today. So hopefully that helps everybody this morning. Again, new web app that will continue to roll out and talk about the features. We'll probably have an extensive session on X and YouTube to show how we're using this to navigate the SPX option structure, as well as other tools throughout the day. So as always, manage risks today. Watch your transition levels as well as the drunken sailor range. Call dominated for today. I'd anticipate this to be supportive. And if we don't talk to you before, everybody make it a great Thanksgiving. We thank everybody for the commentary and joining us and the interaction on X and YouTube. We'll be back after Thanksgiving, as always, with our pre-market preps, as well as our intraday commentary and market review, and then our post-market recap. If our team has time for the rest of the week, obviously we do have some members that will be traveling. So everybody be safe, have a great Thanksgiving, and we'll see you later. Thanks.